a trading plan. Now, when we talk about building a trading plan, we're not talking about just a strategy. You have many strategies that fit into your trading plan. Now, in tonight's class, I prepared a couple short little presentations for you that I'll be sharing during the class. In the recorded version of this class, it doesn't re-record these presentations. If you'd like to see these presentations, you can find them by going to YouTube and looking for the YouTube channel called Forex and CFD Education. That's the name of the channel. And then go look under the folder or the playlist called Building Your Trading Plan. Also tonight, if you notice on your screen, there are two handouts I've put together for you. They both cover how to build your trading plan, step-by-step instructions, and give you some sample formats. These are only available to you during the live class. You cannot download them in the recorded version. So please click on the little download button on your screen, download them now to whatever device you're using, and then you can move them around at your convenience after the class is over or when it fits your, fits your time schedule. Now, also in tonight's class, I'm going to use the term security, but I might say a stock, I might say Facebook, I might say Google, I might say Bitcoin, but I'm referring to all publicly traded financial instruments in which an open market exists. Similarly, I'm going to intermix the terms investing and trading. Typically, an investor takes a long-term position, while a trader takes a much shorter-term position. All of us attending this webinar are here because we're traders. Investors don't build trading plans, traders do. But in either case, the concepts are fit, but it just gets very boring saying trading, trading, trading over and over. So I intermix trading and investing. Now, I'll apologize before we start this class. This is one of my favorite classes to give because it is crucially important for every single trader out there. But the fact is, it gets a little bit like I'm preaching. And I'm sorry if it sounds that way, but I've been trading for 45 years now. And I trade from a trading plan. Okay, it doesn't have to be this written out, guidebook. It doesn't have to have everything. But I have, because when I started, we didn't have PCs. I have index cards that track every one of my trades all the way back to God knows where. I have sticky notes all over my desk because every trade I make, I write down everything. Today we all use things like Excel and we have PCs, and I transfer everything over to my Excel spreadsheets. But a trading plan is more than just a few things that you're going to put on an Excel spreadsheet. You actually have to build some type of format for yourself. And it's really important because you'll find that being able to go back and find things you did in the past will help you. You'll also find it'll help stop you from making the same mistakes over, and it'll also help you define and refine the trading strategies you're using. So in order to become a successful trader, you need to develop a written trading plan, not a strategy, where you put all your necessary trading rules. Basically, a trading plan is your trading Bible. There's no such thing as the ultimate plan because there's no exact same traders. And every trader has a different trading style, different strategy, different risk tolerance, different market experience. It is always better to develop one's own personalized trading plan and to modify it as your experience grows. Now, you're going to find, if you want to be a successful trader, and you'll find it's the traits of most success. We're not talking about millionaire, billionaire, overnight, get rich quick schemes. We're talking about guys that have lasted in the trading arena for many, many, many years. Not guys that got rich, guys that make a couple extra bucks, use it for their vacation fund, their Christmas fund. Maybe they, use it for the renovation of their, and add done a room to their house. But they've steadily made money. Because the fact is, You're not going to start out with $1,000 or $2,000 or $5,000 account and become a millionaire overnight. Not going to happen. So if you think of trading as a part-time job, it's way more than you're going to make working a part-time job. It's more fun also. If you think of trading as a full-time job because you're going to try to make a living at it, okay, same thing. But you're not going to make a living out of trading starting with a $1,000 account. But the whole idea is to last and increase that account. Same thing with investing. Ultimately, you want to buy Google, not because it's going to go up or down. You want to buy Google to put away for your retirement fund, and hopefully it's going to go up over time, down over time. But, when it's time to retire, you would have made a tidy profit on. Well, if you say the same thing, I'm going to put $10,000 in an account, it's not wasted money. I want to grow that account. If Google's going to go up 10% a year, I need my account, my trading account, to go up 15% per year, 20% per year, because I got to work hard at that. Google I just bought and put away. So a trading plan should be thought as a template for trading the markets. Perhaps an even better way to describe a trading plan is that it's a checklist. This checklist will contain each aspect of making a trade in a logical step-by-step sequence that acts as your objective guide to trading the markets. In essence, a trading plan will state your overall short and long-term goals as a trader and provide you a clear checklist to achieve them. Now, that sounds very, very broad. So let's start out with the first thing it's going to be is you'll start out with your strategy. Well, I don't know how many out there of you guys actually have put together a strategy. Okay. What you're going to do, how you're going to decide to enter and exit trade, what's going to give you your buy signal. Okay. But most of us do it in our head. Okay. The problem with doing it in your head is you skip steps. You never have anything finite, and you'll eventually lose. Okay. When you actually write it down, and let's say a trading plan is a lot bigger than your strategy, but the best place to start is with your strategy because you don't have a trading plan built overnight. So you can start out small. Start down by writing your strategy because you'll find when you write it down, you're going to realize, oh, I missed this step. I forgot about that. I didn't do this. Because when you write it down, you kind of are forced to think about it. And you're not thinking about it in uncertain terms. You're thinking about it in very specific terms. And you say, oh, okay. I didn't say only when it breaks support and volume does this. And I forgot to put on there, I should check the economics count to see if there's some major event happening in between my trade. Not I'm making trading from an economic event. I just don't want something that spikes some volatility in the market. Start out there, start out simple, and keep adding to it. Okay. So start out with what strategies are you going to trade? Now, online trading, especially online CFD trading, has opened a whole new world to all of us. But one of the problems with that world is it gives us too many choices. And I'm telling you, I talk to hundreds and hundreds and hundreds of traders a week. And very rarely do I find a trader who actually specializes in something. Specializes isn't saying, I like Google, so I'm going to learn about Google, and I like Facebook, I'm going to learn about Facebook, but I like AT&T, and I'm going to learn about, okay. I've yet to meet somebody who really says, I'm going to focus only on tech, only on stocks, and only the stocks that do this, this, and this, tech stocks that do that, and limit it to a certain group. Because you know what? You and I've been trading for a very, very long time, can't be experts on everything. And you should be an expert on whatever assets you're trading. Expert doesn't mean you talk to, God knows who at Apple told you all this. It means you know its ins and outs, you know its personality, you know what's going on, you know all of its earnings, you know what's happening. If you're trading the euro, you know everything that's happened with the euro this year, last year, how it reacted this way, how it reacted this way, what political events are happening, what social events are happening, what elections are coming up, what the average move of the euro is a day, when it crosses and does better against cable, does it do better against the Australian dollar? you can't know all of that stuff and keep track of it all while you're trading the euro 1 minute, Facebook the next minute, the pound the next minute, and Bitcoin the minute after. It can't happen. I mean, you could spend your whole entire day just studying digital assets. So one of the important things to keep you from getting in trouble is to decide what assets you're willing to trade and write it down. You can change it. You can change every 6 months. You can say, oh, that's interesting to me. I'm going to track it for a couple months, add it into my mix. It's not. It's your plan, but you need to start out somewhere. And included in that is what your daily routines will be. I meet lots of people all the time. Hey guys, tell me, well, you know what? If I have a break at lunch, I check the markets, I check my platform, I make a couple trades. You know, when I get home from work, if the wife's out picking up the kids from soccer, I'll clear it on the computer and check on the platform. You know, I might make a trade or two. This is ridiculous. Your trading plan should include your routine. Maybe you only trade on Tuesdays because you need to have time to do your analysis. You have time to do your research. You have to have the time to look back at all of your trades. But you also have to understand the market has personalities. And these personalities for the market change from morning to night. I mean, you can actually watch how gold changes as the Asian markets are closing and the European markets open. Okay. You can see a bump in gold. You can see a drop in gold, but you can see that gold gets busy at that time of day, where gold in the afternoon, when it's U.S. market time, after the initial morning markets, nothing really happens. Okay. You can't trade Facebook, really, when Facebook is closed. Sure, you can buy CFDs on the platform, but it's really not moving anywhere because Facebook and after hours trading isn't really doing anything. It's just traders bumping it up or down. So the question is that everybody asks, where do I start? And I don't want people to get intimidated. So you should begin your trading plan with just your strategies. What is your edge in the market? What is going to give you or initiate buy or sell signals? What's going to alert you to an asset you're tracking that there's a potential buy or sell position? Start with that. Okay. Then, okay, when I get the buyer seller, what other indicators am I going to look at? I'm going to look at support and resistance. I'm going to look at volume. I'm going to use MACD. I'm going to use RSI. I'm going to watch for chart patterns. What else are you going to look at? Okay. Now, when this happens, and that happens, I'm going to initiate a trade. What type of trade are you going to initiate? A limit order or a market order? How do you determine what price you're willing to enter the market? How do you determine where your exit strategy be and where you need to put your stop loss? Are you going to use the low off of a triangle? Are you going to use the low off of the swing low? Are you going to use the next support level? You know, there's lots of different ways to do it. Then what is your risk management? How much can you risk per trade? How many contracts or how many shares are you going to buy? Okay. How much are you tolerable that you can risk per trade? How many trades can you have going on in the market any day? So having written strategies with your risk tolerance and money management is like having a market blueprint. This blueprint is essential for developing discipline that will lead you down the road of success. If you find yourself not following these rules in your trading plan, then you are deviating from your plan. So, you know, like I said in the beginning, I don't want you to feel that I'm lecturing. I don't want you to feel like I'm trying to tell you I only know best. But this isn't just for me. I can tell you basically what I've seen happen in the market over the years. I can tell you basically where I can see success and failures. But I'm not the one who decided everybody should have a trading plan. This is a consensus of opinion among all successful traders that stay in the market. But because it gets very boring just lecturing, I'm going to share with you a little presentation, and then we're going to come back and start looking at some other things to put into your trading plan.
Throughout your Forex trading journey, you will have both ups and downs. It's easy to get distracted by the different trading methods out there, so you need to make sure you have a trading plan that you stick to, whatever the circumstances. Here are our 5 golden rules for building a successful trading plan. Golden rule number 1 is to keep it simple. You don't need to be a quant, creating complicated algorithms or game theory scenarios for every single trade you place. Simply find a strategy that is straightforward and easy to execute for your particular risk tolerance and trading objectives. Secondly, do your research. By watching this video, you're moving in the right direction. But the more you research the markets and news flow, the more fluent you will become in understanding what makes currencies move, increasing your chances of identifying trading opportunities. Third, be realistic with your goals. Simply stating that you want to double or triple your initial deposit is not enough. Learn to understand risk and reward per trade. Successful traders often have a profit and loss goal on entering each trade. Also, make sure you manage your risk. Work out how much risk is acceptable to you and take it from there. Ensure you're aware of the risk management tools available to you on your platform. Finally, keep a trading journal.
So the most important part, and I mentioned it to you a few minutes ago, is having a routine to your activities. You're trading or initiating a trade, making a trade, closing a trade should be the least important part of your routine. It's the culmination of all the work that you've put together to make the trade. Imagine, here's a football team. Okay. They're professional athletes getting paid millions of dollars, and they're on that field every day running scrimmages. They're in the locker room studying films of their last plays. They're learning every play. They're practicing every play. They're learning the playbook. All of this effort and time, okay, all goes into that Sunday afternoon game. That's the final reward. Whether you win or you lose, the final reward is actually all of that stuff putting together and that game happening. Well, that game is your trade. Now, hopefully you win that trade or you lose that trade. And guess what? Monday morning, they're back in that locker room watching the films, analyzing everything that happened, and then studying all the plays of the opponent they're going to play next week. And they do everything over again. Now, if all these guys who are getting paid mega millions of dollars have to do this, why don't you have to do it? So you need to have a routine. In your pre-market phase, you will write all you were willing to do from now, not from waking up. That's kind of ridiculous. Okay. But on Monday, I'm not going to trade. Mondays is my review of last week. Tuesday is I'm going to look at and all of my charts and set them up for the week. Wednesday, I'm going to start deeping, into analysis. Meantime, you're working on your charts every day. And when you get a buy or sell alert from your charts, you're not searching the market. You're watching your few assets. And when just the fact is, there's always more trades to make. And what you need to do is when you get the buy or sell alert, your trading plan has all of your filters, because what you're trying to do is filter out all the iffy trades, all the risky trades, every filter you have, so that when you initiate a trade, not only do you initiate the best and the most high probability trade you can, you also have your exit strategy determined, your stop loss determined. You've also determined this is what I expect the markets to do. So when it zigs, when you thought it was going to zag, you just close your trade anyway. When it zags, and zags more than you expected, maybe you want to start, this is how I will move up my stop loss as the asset moves in my favor. If it doesn't blurt up to this level, I might move my exit strategy closer. Okay. All of this is part of your guide or your checklist for making a trading decision. Okay. Too many of us just go on the platform, pushing a whole bunch of buttons, fill in the boxes, and initiate a trade. Well, the fact is, before I ever initiate a trade, I've got everything that's going in that little trade box written down on my paper. All I'm doing is going over that trade box and filling in off of my little trading plan what I'm going to do. Because all that trading window is a set of instructions to the computer. And then the most important part is maintaining a trading journal that logs all of your trades so that you can go back and compare them. You have a history of them. But you don't want to just have your entry point, your exit point, your stop loss, your take profit, all that you can export off your platform. What's important is your notes. What strategy did you use? What was your risk reward ratio? What happened good or what happened bad in that trade? Because you also have to remember that a successful trade isn't necessarily a trade you made money on. You can make money on a trade that was a very bad trade. You can lose money on a very good trade. If everything worked the way it should have worked, even though you lost money, guess what? That was a good trade. So your daily routines are crucial for your trading success because based on them, we build a ritual that helps us maintain a high level of focus and a state where we perform at our best levels. Now, if all top athletes and sportsmen go through their own ritual in order to perform at their best levels, why don't you have to? Your trading plan should contain written descriptions of what you will do in the markets. And this includes things like your trading edge, how you will trade it, when it will trade. Your trading edge is your strategy. This gives you the edge above everybody else. But most important is your strategy for risk management and profit taking, as well as your overall goals. Now, I came up with this word. It's not really a word, but I call it stick-to-itness. The creation of a trading plan is highly useful as it makes us stick to our guide. It makes us follow all the steps that we've thought out and put an effort into so that we don't overlook something and make a mistake, or we don't allow our emotions and our personal beliefs and our buddy over here to pull us down the wrong way. Now, the fact is, if I would ask 100 of my trading buddies or 100 students I've had and ask them to send me a copy of their trading plan, I guarantee you nobody will. In fact, nobody ever has. Now, the fact is, even I couldn't send you one because it's all personal things. It's notes. It's not something that's written out like a college textbook. It is a set of notes. It's a set of filters. It can be a set of index cards. It can be stuff on this Excel spreadsheet and that Excel spreadsheet, and this goes there and there. You know, you're not spending hours and days and months creating this monstrosity. You're adding on to it as you move along. Okay. And you can have 20 different strategies you use. Some that you use when the market's doing this and some that you do when the market's doing that. You can have a strategy you use when a triangle is well developed and you're looking at it for a breakout. Okay, you can have one strategy. When will we get the breakout up or the breakout down? I'm looking at my support and resistance. I'm looking at volume. Okay, I'm gonna make my decision there. But I have another one when MACD gives me a crossover and I have a central bank meeting. But the fact is, unlike business owners who generally have a business plan, but think of this. If you decide, and I'm going to give you this example, you decide you want to open up a store in the mall. I don't know why, for some reason, your whole live stream has been opening up a retail store in the mall. And your live dream is actually to open up a women's clothing store in the mall. I don't know why, but this has been your life dream. You're walking through the mall and a shop is closed, there's a for rent sign in there, and you say, this is the perfect place for me. So you go home and you call your mom and dad, you call your brother, you call your best friend. Say, listen, guys, I've wanted to do this for a long time, but I don't have enough money. It's probably going to cost me $200,000 to get this place open with the rent, buying all the inventory, buying the computers, the register, everything else I got to have. But I need to raise $200,000. Now, you say, I got $100,000 in my bank account, so I need investors for $100,000 more. Well, your mom and dad, of course, they love you. Mom says, we got an extra 50,000 bucks we can loan you, but we need to get it back. And your best friend says, I got 10,000. And your sisters and brothers, well, now everybody's put together, and guess what? You've raised that extra $100,000. But they're not writing you checks. They're promising you, but they want to see a business plan. They want to see something. They want you to explain, where do you come up with this figure of $200,000? They also want you to come up with what you're promising them. Okay, you're going to invest, and I'm going to give you how many shares of my business, or what percentage of my business, and what do I think sales will be, and what will my profit be, and what will you get back, and how will you get it back, and will you get back little increments, or will you never get back your 10,000, but you get 200? You'll get profit every month, and you'll get it. So that should give it. They want something in writing. They told you they give you the money, but they need something in writing. So you have to do all this stuff. Well, this is the beginnings of your business plan. Because when you put it all together, you realize, you know what? I forgot about insurance. And I forgot about, I'm going to have to cover payroll and health plans and all this and take cash. So I really need 300,000, not 200,000. So you go over to the bank. Bank manager says, give me a business plan. You hand him the same plan you ended up giving to your mom and dad. He says, no. We're not concerned with this and that. We want to see figures. We want to see monthly sales figures, what your costs are going to be, what your overhead is, all broken down. Well, now you got to go home and start adding on to your business plan. This is what you're doing as a trader. You're adding on, you're defining it. You're getting more and more information in there. Well, now that you're thinking about it, you never thought about how many employees you have to hire. Okay. Yeah, you had to have an employee, but how many do you actually have to hire? How many overlaps will there be? What are the benefits you have to provide? What will the benefits cost you? You never thought about, okay, I need to rent that store. You went to the mall, they said they'd rent it to you, but here's their list of things you have to have. All this insurance. I never knew I had to have all this kind of insurance. I got to talk to an agent and find out what this is going to cost me, what the monthly payments are going to be. Whoever thought about workers' comp insurance, disability insurance? So when you write it down, you're forced to think it out and put it together. So in most lines of business, time, though, is your main driver for evaluating performance and doing your business plan. But in our world, time is irrelevant. And that's what you have to understand. In the trading arena, we don't have time against us. You want to open up that retail store, you have time against you because you need to rent it before the mall rents it to somebody else. Well, the minute you rent it, you've got expenses. Every day you're paying the electric bill, you're paying the tax bill, you're paying the water bill, you're paying the insurance bill. And so every day is costing you money. In the marketplace, in trading, you put $5,000 in your account. It's sitting there. It's not doing anything. You're not losing it. It's not costing anything. It's sitting there. So you don't have time against you. You can sit there for a year. It doesn't make a difference. And if you start to tell yourself that time is irrelevant because there are always trades. See, when you start to think, guess what? I can only trade Facebook tomorrow. It's going to be the best deal possible. It's not like your retail store where you're going to miss the Christmas selling season. Or you have expenses happening, so if you're missing sales, not in the world of trading. Okay. So time is irrelevant, but the work isn't. So if you make trading your most important thing and not the work and not the analysis, you'll end up out of the markets. Now, in our world, we have to constantly be evaluating everything we did. But so do you do in retail, or so do you do in business. I mean, if you have a publicly traded company, you just got to submit quarterly earnings. You got to make all your stock statement. You got to do everything. If you're a small business in the mall, you promised all your investors, your parents and your friends and your brothers and sisters, that every 3 months you're going to give them an update. You're going to give them financial. You're not going to have a meeting, but you're going to send them out, and you promise them every 6 months to send them a check with their profits. You have to evaluate everything. How do we do this in the markets? Well, I picked a number, and this number is from me. I stop everything, once I finish 10 trades. When I've finished and completed 10 trades, I do not make another trade again until I've gone back and analyzed the successes and failures. I've looked at my strategy. I've looked at all the trades. I've done my full analysis before I can make another trade. Now, on the average, it'll take me about 3 months to place 10 swing trades and about 4 days to place 10 day trades. I don't trade that many assets. I don't make that many trades. I spend most of my time doing analysis because that's what I actually enjoy. So basically, I don't have to do that much. But the number that you're using is the number that fits you. So what is the number of trades you're using when evaluating your trading? If you decide, I do lots of trading, so I want to sit down once a month, and about a month I do about 40 trades, 50 trades. Okay, after 50 trades. But you have to have this golden rule. After 50 trades, I stop. It's not the end of the month now, or not look at all that money in my account. 50 trades, you stop, and you do your analysis. Why is this important? Because it makes you stay in control. When you're in control of the markets and the markets aren't in control of you, you do better. So if your golden rule is I stop my analysis after 50 trades, or I stop my trading till I do my analysis, this is part of your trading plan. You write it down and you count your trades, and on the 50th one, when you close it, you stop. Because guess what? Your trading plan tells you have to, and puts you back in control. That little break puts you back in control of the markets. It makes you stop and realize you're not addicted. You still have control. Now, how you're going to identify your successes and failures, what you're going to use as measuring your performance, it's only up to you. But keep it simple. Don't go into this great big thing. I look at my success and failures. I look at how I did, which strategies I worked, and I look at how many points I made a trade. I go back and look, could I have made more points if I did this? Could I have covered my butt if I did that? Okay. All I'm trying to do is better define my plan and my risk management, my profit taking, and by analyzing how I did each trade, I can figure this out. Okay. Now, I already mentioned the markets have personalities. So you have to figure out when you're going to make your trades. And since you're mostly part-time traders, say, I'm only going to make my trades Tuesday afternoons. And I'm going to trade Tuesday from 3 o'clock to 7 o'clock. That's it. Hey, it sounds like it's very limiting, and you're going to miss all these trading opportunities, but believe me, you're not. The rest of the time, you're just a spectator on the sidelines, because the rest of the time, you're working on your plan, your strategies, your evaluations, your analysis. Okay, and again, you want to keep defining your trading edge or your trading strategy. You want to keep them simple. You have to have multiple ones. You have to say, okay, this is happening, that's happening, this is happening. So I'm going to go pull strategy A out of my box, and that's the one I'm using for this. I see a triangle. I'm going to use my triangle patterns strategy. I see MACD crossovers, and I see this and that happening. I'm going to use that. I see, oh, it's leading up to a Federal Reserve market meeting. So since I'm trading the euro dollar, I'm going to use my central bank strategy. Whatever it is, you pull that out and you define it. And then we've already discussed it, identifying the assets that you can trade. Now, you'll have first ask you a question, what is my time horizon for this trade? Day traders will want to focus on events in the news, while long-term traders will want to focus on securities. Now remember, we're not news traders. But since we're short-term traders, we're only looking to trade assets that have momentum and volatility. So there's really no sense paying attention to the euro US dollar if it's not trending today. There's nothing on the economics calendar. There's no major news headlines. So go over and look at the other assets you're trading. But remember, goals are very important. Short-term goals, long-term goals, and decisions. Because remember, a goal without a plan is just a wish. And a trade without a plan is a gamble. So figure out things like, what do I do the first thing in the morning? Is I look at support and resistance levels. I have them on every one of the charts that I use. I'm always looking at how the markets are reacting to those. I don't ever make a trade without having support and resistance, okay, on my charts. I'm only going to trade an asset that's been trending. So I'm only looking at the assets I have that are trending. Wasting my time on assets that aren't trending today is just a waste of my time. I don't need to pay any attention to them because I'm not going to trade anything that is not in a trend. And then a question is, where do you put your stop losses? And that's quite important, but that comes down to your risk management, which is really very, very important. So let me share with you a little presentation on risk management. And then we'll come back and talk about the other things we need to incorporate into this trading plan. So it's very, very important to include in your plan is how much money can I use per trade? There's too many people get suckered in and they're making trades because they want to make profit that are too large for them to trade. Okay. You need to have figured out how much you can risk per trade, and that is all that you ever trade. Now, another odd rule, but it works extremely well, is when to take breaks. I'm not talking about going on vacation. I'm not talking about holidays. Okay? I'm not talking about days markets are closed. In order to control your emotion and stay on top of the market and make sure you're not getting addicted, is part of your trading plan should be, for me, my rule is after 100 trades, I take a day off. I don't open my computer. I open my computer, but I don't look at the platform. I don't look at any assets. I don't do any analysis. I ignore the market for one day. Because guess what? It gets me refreshed. It comes back with a fresh set of eyes, and I'm back into control over the markets. Now, another rule of thumb is for me is if I lose 2% of my capital, or in other words, I start out the day with a couple bad trades or even one bad loss, guess what? I close my account for the day, close out all my other trades, and I just stop trading for the day. Why? Because you get in a negative mood. You get a little bit too aggressive because you start chasing the trades, so you want to make up for that loser you had in the morning, and you make mistakes. But it happens on the other side. If you happen to have a winning trade in the morning and make a lot of money, you know what? Shut down your computer. Be glad that you did. Have a smile on your face and go spend a couple bucks. Go to the mall. Go get a cup of coffee with some friends. Go get a beer. Okay. But the fact is, making money early in the day also tends to make you too cocky. And then you say, you know what? I should only be risking $100 in this trade, but you know what? I made 300 this morning. So you know what? I'll risk 200. Not a way to trade. You lose your winnings plus you'll end up negative. So always keep in mind. But again, there is no standard trading plan. Start out with some basics and keep adding to it. But you'll find that when you take your ideas out of your head and put them on paper, you'll find the errors in your ways. You'll find ways to clean them up. You'll stop making mistakes. I'll give you an example. I have a friend who set up a perfect trade. He did all of his analysis. He was looking to the euro Australian dollar. Everything was completely right. He did everything by the book. Should have been a perfect trade. But guess what? By the time he traded, made the trade, and got up from his computer to get a cup of coffee, he was stopped out and had a losing trade. Why? He forgot to look at the economics counter to see that the RBA was making somebody from the RBA was making a speech. Well, the speech had no real value, no real content for the markets. Didn't change anything about his trade, and his trade would have been exactly right, except he didn't factor in the extra volatility for those few minutes. And at those few minutes, the pair dropped below his stop loss, and he got stopped out, even though an hour later, it was exactly where it should be. But why? Because he didn't follow his trading plan. He didn't use a checklist, and he forgot to look at something. Okay. This is what following your plan will do for you. So it's like lecturing, and I'm sorry about it. It's very important that you do this. And again, think of it as your business plan. So think of your first steps as you need to borrow the money. Okay, you need to put something on paper. And when you put it on paper for your mom and dad, it didn't have to be so great. It didn't have to be so pretty. It didn't have to be so beautiful. But then when the bank wanted more, it had to be beautiful. So you start out with you're going to get ready for mom and dad. Then what are you going to get ready for the landlord when you want to get him to give you the lease? And then what you want to give to the bank. Okay, and slowly build on it. So thank you very much for joining us tonight. Thank you for supporting Alvexo. And if you want to learn more about trading plans or more about trading, go to www.alvexo.com, open a demo account, sign up for their education, their trading academy, and you'll be surprised in no time at all. You'll start trading like a pro. But remember, trading like a pro is all about risk management, writing it all down, and spending the time keeping records. It's not all about pushing that button to make the trade. So thank you very much. Have a great week, and thank you for being part of our class. Good night now.